Home prices just hit a record high, then suddenly dropped. Is this the start of the housing market crash everyone's been waiting for? Or is it just another false alarm? Buckle up, folks. We're about to dive into the wild world of real estate and uncover the truth behind those clickbait headlines. Are you ready to separate fact from fiction? The housing market has been a roller coaster ride, leaving many wondering if they should buy, sell, or just hold on tight. With conflicting reports and expert opinions flying around, it's hard to know what to believe. But don't worry, we're here to cut through the noise and give you the real scoop. Hey there, savvy viewers. Today we're tackling the hot topic on everyone's mind, the housing market. You've heard the rumors, seen the headlines, and maybe even felt a twinge of hope or fear about a potential crash. But before you make any big decisions, let's look at what's really going on. We'll break down the numbers, debunk some myths, and give you the honest scoop on where the market's heading. We know that for many of you, this isn't just about numbers on a screen. It's about your dreams, your future, and your financial well-being. That's why we're committed to giving you the most accurate and up-to-date information possible. So whether you're a first-time home buyer, a seasoned investor, or just curious about the market, stick around. This video is for you. Let's start with the facts. The median home price in the US hit a whopping $439,500 in June 2024. That's a 47% increase over the last 5 years, and a 4.1% jump from last year. But here's the kicker. From June to July, prices dipped by 0.6%. Sounds scary, right? Well, hold your horses. This same dip happened in 2021, 2022, and 2023. It's called seasonality, folks. To put things in perspective, let's look at the bigger picture. Despite this small dip, home prices are still up significantly compared to pre-pandemic levels. This trend shows the resilience of the housing market, even in the face of economic uncertainties. It's crucial to understand that short-term fluctuations don't always indicate long-term trends. The housing market is like a roller coaster with ups and downs, but it generally moves upward over time. Remember, real estate is typically a long-term investment, so don't let these monthly changes scare you off. Now let's talk about those crash theories. Some say a wave of foreclosures will tank the market, but here's the truth. Foreclosures are actually down compared to last year, and nowhere near the 2008 crisis levels. Others claim a sudden surge in home listings will crash prices. Sorry to burst that bubble, but there are only 1.81 million homes for sale right now. That's up 17.7% from last year, but still way below pre-pandemic levels. Remember the foreclosure crisis of 2010? We saw 2.9 million foreclosures in that year alone. Today's numbers don't even come close. This stark contrast shows just how different our current market is from the last housing crash. It's also worth noting that today's homeowners have much more equity in their homes than they did in 2008. This equity acts as a buffer against foreclosures. Plus, lending standards are stricter now, meaning fewer risky mortgages are out there. These factors make a foreclosure-driven crash much less likely. But what about a recession, I hear you ask? Well, here's the deal. A deep recession with high unemployment could indeed crash the market, but it's highly unlikely. Why? Because the US government and Federal Reserve can't afford to let it happen. They'll do whatever it takes to keep the economy afloat, even if it means printing more money. It's crucial to understand that our economy is in a unique position. The government is deeply in debt, which means they're motivated to avoid a severe downturn at all costs. This financial reality shapes their policies and interventions in the market. Moreover, the job market remains relatively strong, with unemployment rates staying low. A housing crash typically requires a combination of high unemployment and economic distress, which we're not seeing right now. The government's willingness to intervene, coupled with a resilient job market, creates a safety net for the housing sector. Speaking of the Fed, they're expected to start cutting interest rates soon. This means mortgage rates are likely to drop even further. The 30-year fixed rate is already at a one-year low of 6.46%. If the Fed keeps cutting, we could see rates in the 5 to 6% range in 2024. maybe even below 5% in 2025. But remember, lower rates often mean higher home prices. However, there's a catch. While lower interest rates make borrowing cheaper, they can also fuel inflation. This could lead to a scenario where homes become more expensive even as mortgage payments become more manageable. It's important to note that interest rates aren't just about making homes more affordable. They're a tool used by the Fed to manage the overall economy. Lower rates can stimulate spending and investment across all sectors, not just housing. This broader economic impact can indirectly support housing prices by boosting overall economic growth. So why aren't home prices crashing? It's simple. Demand still outstrips supply. We're not building enough homes to meet the need, and there's no quick fix in sight. Plus, if the government steps in to rescue the economy, it'll likely be inflationary. And inflation tends to push home prices up, not down. Consider this. Even if demand were to decrease slightly, we're still dealing with years of underbuilding. This housing shortage acts as a buffer against significant price drops, keeping the market stable even in uncertain times. Another factor to consider is the increasing cost of construction materials and labor. These rising costs make it challenging for builders to construct affordable homes, further contributing to the supply shortage. Additionally, zoning laws and regulations in many areas restrict new construction, adding another layer to the supply problem. Let's not forget about the role of investors in the market. With stocks and bonds offering uncertain returns, many investors are turning to real estate as a safe haven. This increased investor activity adds to the demand side of the equation, putting upward pressure on prices. Moreover, the rise of remote work has changed where people want to live, creating new hot markets and keeping prices elevated in desirable areas. I get it. Many of you are hoping for a crash so you can finally afford a home, but wishing doesn't make it so. The harsh reality is that housing affordability might get worse before it gets better. We need more homes, lower inflation, and faster wage growth to fix this. But these changes take time, and they're not happening overnight. It's important to note that affordability isn't just about home prices. It's a complex equation involving incomes, interest rates, and overall cost of living. Even if prices dip slightly, other factors could still keep homeownership out of reach for many. Furthermore, the definition of affordable varies greatly depending on location. What's considered affordable in one area might be out of reach in another. This regional variation adds another layer of complexity to the affordability issue. It's also worth considering alternative paths to home ownership, such as co-buying with friends or family, or exploring up-and-coming neighborhoods. The housing market isn't crashing anytime soon, folks. It's a tough pill to swallow, but it's the truth. Instead of waiting for a miracle, focus on what you can control: your finances, your goals, and your knowledge of the market. Stay informed, stay realistic, and remember, the best time to buy a home is when you're ready, not when the market says so. But don't let this discourage you. The real estate market is always evolving, and opportunities arise in every market condition. Keep educating yourself, stay flexible in your approach, and be ready to act when the right opportunity comes along. And most importantly, don't forget that a home is more than just an investment. It's a place to build your life and create memories. So keep your eye on the prize and don't give up on your home ownership dreams.